If the house always wins, shouldn't you just buy the house? Of course, that's not how it works. Welcome back to CasinoLove. This is the 6th episode in our series where we take a factual look at publicly traded companies in the iGaming space. Today, we are looking at FDJ United. As always, this is not financial advice. We are not telling you what to buy, what to sell, or what to avoid. Our goal is simply to look at the company, understand what it does, and go through the latest official information. And with FDJ United, there is one important point right at the start. This is not a pure online casino stock. It is a broader betting and gaming company. It combines monopoly-style lottery activities, retail betting, competitive online betting, and gaming, international lottery operations, and payment services. So it belongs in this series, but it is structurally different from names like Evolution or Playtech. So first, what is FDJ United? On the market, the security name is FDJ United. The ticker is FDJU, and the stock trades on Euronext Paris. One nuance here is that the official share profile still lists the corporate name as La Française des Jeux, while FDJ United is the security's name and the group brand. The company's roots go all the way back to 1933, when the French National Lottery was created to support wounded veterans of World War I, the so-called Goulet Cassé. That origin still matters because FDJ United continues to frame itself not just as a gaming business, but as a company with a redistributive social model and strong public interest links. The modern version of the group was built in stages. It listed in Paris in 2019. It bought ZEturf in 2023. It became the operator of the Irish National Lottery in 2023 through Premier Lotteries Ireland. It acquired Kindred in 2024. Then in 2025, it rebranded from FDJ Group to FDJ United to reflect a business that had become more international, more digital, and more diversified. So this is a company with a long French monopoly heritage, but also a much newer European online betting and gaming layer on top of that. To understand FDJ United properly, it helps to break the group into its 4 business units. First, there is French lottery and retail sports betting, which is the legacy core. This includes lottery brands like Lotto, Euro Millions, My Million, Euro Dreams, Keno, Joker Plus, Crescendo, and Illico Instant Games. It also includes Parions Sport in physical points of sale. FDJ says it has exclusive rights for these lottery activities in France, plus exclusive rights for sports betting in retail locations. This is still the group's primary source of revenue. Second, there is online betting and gaming, often shortened to OBG, in the company's own materials. This is the competitive side of the group. Here you find sports betting, horse race betting, poker, and casino products in markets where those activities are locally regulated. The official activity page lists brands including Unibet, 32 Red, Vlad Cazino, Bingo.com, Maria Casino, Casino Who 01, Auto Casino, Kalik Kapelit, ZEturf, and ZEbet. So for many viewers, this is probably the part of the group that feels most recognizably iGaming. Third, there is international lottery and B2B solutions. That includes Premier Lotteries Ireland, which operates the Irish National Lottery under an exclusive license running to 2034, and Relax Gaming, which is the group's B2B supplier of online gambling products and platform technology. So even though FDJ United is often seen mainly as a consumer-facing operator, it also has a supplier angle through Relax. Fourth, there is payments and services. This is built around Nirio and Nirio Business, which are payment and collection services in France. It is not the main reason most gaming investors follow the stock, but it is part of the group's diversification story. So when you step back, FDJ United is not just a lottery company, and it is not just an online betting company either. It is a hybrid group sitting across several regulated gaming verticals. There is another detail that makes FDJ United different from many other listed gaming names. The ownership background is unusual. On the official governance page, as of 14th of March 2025, the French government was listed at 21%, Veterans Association at 16%, employee funds at 3%, French institutional investors at 16%, international institutional investors at 26%, and individual shareholders at 18%. The same governance page also explains that the French state retains special oversight mechanism around governance and certain ownership thresholds. That matters because it tells you this is not just another private sector online gaming operator with a normal free float story. The state connection, the veterans link, and the public interest legacy are still part of the corporate structure. At the time of recording, the latest full official results available are FDJ United's 2025 full-year results, published on 19th February 2026. The company's publications page lists those as the current full-year results package. For 2025, the headline numbers were these. Gross gaming revenue, or GGR, came in at 8.70 billion euros. Revenue came in at 3.67 billion euros. Recurring EBITDA came in at 902 million euros for a margin of 24.5%. Adjusted net income was 487 million euros. Reported net income was 176 million euros. Free cash flow was 782 million euros. And net financial debt at year-end was 1.721 billion euros. Now, one very important nuance. FDJ United presents both reported and restated comparisons because Kindred only entered the consolidation scope during 2024. That means the clean like-for-like comparison is not the reported 2024 number, but the restated 2024 number, which assumes Kindred had already been in the group from 1st of January 2024. On that restated basis, 2025 GGR was up 1%, but revenue was down about 3%, and recurring EBITDA was down 6.5%. And this is where the business model becomes especially important. In a company like this, revenue is not the same as the total amount wagered by players. GGR is the amount left after player winnings. Then public levies and taxes take another big slice before you get to net gaming revenue and group revenue. In 2025, public levies on games rose to 5.21 billion euros, or 59.9% of GGR. So you can have a situation where GGR is slightly up, but revenue and EBITDA are under pressure because taxes went up. How did the business units perform? The French lottery and retail sports betting business was still the heavyweight. In 2025, this unit generated 6.95 billion euros of GGR and 2.538 billion euros of revenue. Lottery revenue was up 2.2% to 2.09 billion euros. Online lottery revenue grew 8.1% to 316.2 million euros, and the company says online lottery now accounts for more than 15% of the lottery business, with more than 6 million players at the end of December 2025. Retail sports betting revenue, however, slipped 2.3% to 442 million euros, mainly because 2024 had a stronger comparison base thanks to the UEFA European Championship. Recurring EBITDA for this business unit was 913.3 million euros, with a margin of 36.0%. Then there's the online betting and gaming unit, which is the piece many viewers will care about most from an iGaming perspective. Here the numbers were weaker. GGR fell 8.1% and revenue fell 11.8% to 907.7 million euros. Recurring EBITDA fell to 181.6 million euros and the margin dropped to 20.0% from 28.5% a year earlier. Management said the main reasons were a tough comparison against the 2025 football tournament, tighter regulations in the Netherlands, and tax increases across France, the Netherlands, Sweden, and Romania. At the same time, management also said active players increased by more than 10%, and that outside the UK and Netherlands, GGR rose 5.6% and revenue rose 1.3%, helped in part by strong market share gains in France. There are also some interesting operational details in that OBG unit. The company says Kindred integration was completed. It says 32Red and Unibet were rolled onto the proprietary KeySP sportsbook platform in the UK, while Unibet and Vlad migrated to KeySP in Romania. It also launched 32Red in Romania, relaunched Auto Casino in Sweden, then brought back Unibet and Maria Casino there later in the year, and launched a cross-market jackpot across 7 countries. So, operationally, there was a lot going on under the surface, even in a tougher revenue year. International lottery was much smaller, with revenue of 169.9 million euros and recurring EBITDA of 38.3 million euros. The company says Premier Lotteries Ireland itself grew, but the business unit was affected by the disposal of Sporting Group and the gradual end of low-margin B2B contracts. Payment and services generated 61.9 million euros of revenue and a recurring EBITDA loss of 5.1 million euros, as FDJ United continued investing behind Nirio and reshaping the activity mix. So the summary by business unit is quite clear. The French monopoly-linked business remained solid and highly profitable. The competitive online business had a more difficult year, and the smaller international lottery and payments activities remained secondary in size, even if strategically useful. What drove the results? This is the section where we stay very close to the management's explanation, which was very straightforward. Tax increases and tighter regulation were the big headwinds. The company says gaming tax increases had an impact of more than 50 million euros in 2025 across France, the Netherlands, and Romania. For 2026, the expected impact rises to nearly 90 million euros, mainly because of further increases in the Netherlands and the United Kingdom, plus the full-year effect of earlier tax changes. Some of the tax changes are quite material. In France, lottery and betting levies rose from 1st of July 2025 across several categories. In the Netherlands, online gaming levies went from 30.5% to 34.2% in January 2025, then to 37.8% in January 2026. And in the United Kingdom, the government announced that online casino gaming tax would rise from 21% to 40% GGR from 1st of April 2026. Online sports betting tax is also set to rise later from 15% to 25% from 1st of April 2027. There were also other pressures below the EBITDA line. Net financial expense worsened because of the cost of debt after the Kindred acquisition. The effective tax rate rose to 42.9%, and the company says that was mainly because of an exceptional contribution on large companies in France, worth 26.7 million euros. On top of that, non-recurring operating expenses rose sharply, mainly because of impairments of intangible assets recognized in purchase price allocation, including 165.8 million euros in the online betting and gaming unit. That helps explain why adjusted net income was almost flat year-over-year, down only 0.7%, while reported net income dropped much more sharply, to 176 million euros. So the important distinction is this. The story was not that the business suddenly collapsed. The story, according to the company's own materials, was that FDJ United went through a full year of Kindred integration, while also absorbing major tax pressure, tied to regulation and some non-recurring accounting and financing effects. A few more facts help round out the picture. Despite the tougher earnings backdrop, FDJ United still converted 87% of recurring EBITDA into free cash flow, with free cash flow reaching a record 782.4 million euros. Net financial debt fell by roughly 96 million euros year-over-year to 1.721 billion euros, and leverage stayed at about 1.9 times recurring EBITDA. That is not a trivial point. It means that even after Kindred acquisition, the group still describes itself as having room to rebuild borrowing capacity over time. On dividends, the board proposed 2.10 euros per share for 2025, up from 2.05 euros for 2024, with a payout ratio of 80% of adjusted net income. The company also says dividend policy remains tied to annual increases and at least 75% payout ratio in its medium-term framework. So even in a year with pressure on like-for-like revenue and EBITDA, the company still presented strong cash generation and an increased proposed dividend. Looking ahead, FDJ United says it is aiming for a slight revenue growth in 2026, with a stable recurring EBITDA margin of 24.5%. That guidance already assumes nearly 90 million euros of additional gaming taxes. The company also says growth should be more pronounced in the second half of the year, because the tax timing and comparison base are less demanding later in the year. For the French lottery and retail sports betting business, 2026 drivers include nearly 700 planned point-of-sale openings under banners, continued online lottery recruitment, Laro's 50th birthday anniversary, and the fact that the year contains free Friday the 13th, which matters in the French lottery market. The group also plans more instant game launches and intends to use the FIFA World Cup as a major retail sports betting event. For the online betting and gaming unit, the company says the business is being reorganized to complete its transformation. It expects all markets to contribute to GGR growth, even though revenue will still feel the impact of almost 60 million euros of tax increases. Key points include wider use of marketing automation and AI-supported customer operations, the international expansion of 32Red, the completion of the multi-license strategy in Sweden, the unification of the online sports betting and poker brands under Unibet in France, rollout of the Relax proprietary poker platform, and preparation for the Finnish market opening scheduled for mid-2027. And then there is the medium-term plan. Under Play Forward 2028, and assuming a stable fiscal environment, FDJ United says it expects revenue growth to accelerate gradually until it reaches around 5% in 2028. It kept its targets for recurring EBITDA margin about 26% in 2028, EBITDA to free cash flow conversion about 80%, and the dividend payout ratio of at least 75%. It also says it wants its proprietary sports betting platform fully rolled out by the end of 2027, and it has increased the cumulative performance plan target from more than 120 million euros to more than 150 million euros by the end of 2028. Again, those are company targets, not our forecast. Now, let's put the stock chart on screen. At the time of recording, the stock was trading in the mid-25 euro range. Euronext live quote page showed FDJ at 25.45 euros on 10th of April 2026, and the official share page screenshot prepared for this video shows 25.43 on 13th of April 2026. Again, we are not showing this to make a buy call or a sell call. It is simply part of the factual picture. And in FDJ United's case, the chart matters because the market is trying to price several different things at once. The stability of the monopoly-linked French business, the profitability and integration of the Kindred online business, the impact of higher gaming taxes, and the company's ability to deliver its 2028 plan anyway. So for this name, the chart is not just about online casino sentiment. It is also about regulation, tax policy, and whether a hybrid gaming model can keep compounding under tougher conditions. So what is the clean takeaway here? FDJ United is one of the more unusual names in this series. It is not a pure iGaming supplier. It is not just an online betting brand owner either. It is a hybrid European betting and gaming group with a large monopoly-style French lottery core, a competitive online betting and gaming arm built around brands like Unibet and 32Red, an international lottery business in Ireland, a B2B asset in relaxed gaming, and a smaller payments business through Nirio. For players, that means there is a good chance they know at least one part of the group already, even if the parent name itself is not familiar. For traders and investors, the latest official picture is this. The core French lottery and retail business remained solid. The online betting and gaming unit had a harder year. Tax increases and tighter regulations were major headwinds. Cash generation stayed strong. And management is telling the market that 2026 should bring a return to growth, even if more tax pressure is still coming through. So FDJ United is probably best understood not as a single theme stock, but as a combination of stable monopoly cash flows and more volatile competitive online gaming exposure. And that is exactly what makes it interesting for a series like this. This was FDJ United, not a recommendation, not a financial advice. Just the company, the products, and the latest official facts.